Good morning, good evening, and good afternoon, everybody. Hope everybody's having a fantastic day today. It is time for high probability short-term profits with the one, the only, Mike Wade. Let's get things going with a market review. Then we're going to move over to news update. We're going to talk about last show's trade as well as give you a brand new trade today. And then we're going to look at your audience stocks. We're going to kind of go through any tickers that you may put in the chat. So go ahead and put those tickers in the chat if you want Mike to look at them in a little bit. Now, it is time for the man, the myth, the legend, Mike Wade.
Oh my gosh, buddy. How you doing this morning?
I'm doing pretty well. How are you doing this morning?
Good. I'm in a different spot today. I moved from the jungle in Uvita, Costa Rica, and now I'm living in San Jose. So I'm literally immersed in jungle at the moment.
Are there monkeys?
And there's monkeys, and you know what they have here, Ryan, that I didn't think about too much when I came down here?
Internet.
Yes. Well, they do have it most of the time. Well, some of the time, depending on where you live. But they have these massive insects here. I mean, insects you've never seen in your life, caterpillars that are this long, and grasshoppers that are the size of your face. And
man, that sounds like nightmare fuel, if we're being honest.
Yeah, I'm not a big insect fan, and especially if they get on me.
Absolutely.
All right. Well, hey, Ryan, let's flash up this graphic, the heat map, because I want to talk about the markets a little bit. Now, I laugh. I shouldn't laugh, but it's cute. It's exciting to me because when you see a sea of red like this is the performance of the S&P 500 over the last week, and it's a bloodbath. The markets are rolling over hard, and not good if you have a stock portfolio. But if you're selling credit spreads like we're doing here on this show every Thursday, this is good news. You know, it's much easier to profit in a market that's doing this than the other way around. Now, we can profit in any market direction, but this is prime time credit spread environment. So we are going to go after airlines today. And I wanted to also just before we go into the airlines, I'm going to look at airlines here in a minute. Let's take a look at the S&P 500. Okay, so I'm going to use an ETF, exchange traded fund. It's a stock. Don't get too excited. Exchange traded fund is a stock, and this is the SPYs. It's that ETF that tracks the S&P 500. And some basic technical analysis that I wanted to talk to you about today is one. The first distinction is that institutions control the bulk of the market. Let's say 75, 80% of activity in the stock market is institutional. And by that, I mean the big companies that have a boatload of money. They move this market where they take it, where they decide to take it. And so we can actually discover their intentions by looking at what has happened over the last week. So we hit an all-time high there, and then we gap down, and then a big red bar, another big red bar, a slight dribble up, and then yesterday, boom, the S&P 500 dropped all the way down to this red line, which is the 50-day average. All right, so that's obviously a bearish move, but the secret sauce here that would have me predict that the markets have further downside is down here. These volume bars. So volume is the number of shares that changed hands during that trading day. And if you look at the size of the red bars over the last 6 days, big red bar, big red bar, big red bar, tiny green bar, tiny red bar, even bigger red bar yesterday. These are called distribution days, and we've got 4 of them. 1, 2, 3, 4 out of the past 6 days. If you go back and look at charts historically, you'll notice that there are distribution days at market tops every single time. So the question becomes, are we going to drop further? And I don't know. We could bounce today. We could bounce off the 50-day average, and this thing could recover and set new highs. But the safer prognosis would be with 4 out of 6 distribution days and some big red bars, the prognosis, at least today, is down. That same pattern exists on the NASDAQ 100. This is the triple Qs. That's also an ETF that tracks the NASDAQ. Remember, this is like NVIDIA and Broadcom and Qualcomm and Google and all of these big tech stocks. They're really being sold off. Look at the distribution days: 1, 2, 3, 4, 5. 4 out of 6 and 5 out of whatever that is, 5 out of 10. So 50% of the volume on the last couple of weeks or so has been distribution. Is the NASDAQ going to continue down? It sure looks like it. It sure does look like it. And then if you go and take a look at the futures for this morning, we can kind of get an idea. Are we going to bounce? Maybe. At least at the open, the S&P looks poised to come down just a tad bit, 0.02%. Now it's unchanged. So across the board, pretty muted. The Dow up 0.03% and the NASDAQ up 0.11%. So let's call that a flat open. So we don't know yet. Now, a lot of things have been happening in terms of stocks coming down hard. We're going to look at, there's so many stocks to look at today. So please, as Ryan said, pop the stocks you want to look at in the chat box. But given the sea of red, given the distribution days, given that numerous companies have come out recently, including airlines. Actually, let me show you the airline ETF. There's an actual ETF called XAL. XAL is an ETF that tracks airlines. Check this out here. Would you all say, by looking at this chart, that airlines are coming down hard? Well, heck yeah, they are. And we've had 2 airlines announced yesterday. We had a trade on Delta we'll look at here in just a second. Delta was a winner. We'll look at it. But American Airlines, as well as Southwest Airlines, have tanked hard post-earnings from yesterday. So that's what we're going to go after this morning. One of those 2. I'm going to go after American, I think, but we'll look at both. Here's the trade we did on Delta Airlines. And this is a risk graph. I use a piece of software called Tom's Tools, so I can paint pictures of my trades. And this tracks the amount of credit we received, the risk, the return on investment that was achieved on this one. And you can see here that we placed the order for this trade on earnings. Right after earnings, Delta tanked, and then it started making a run up. We have clear rules that say don't do anything unless the stock closes above our short strike. That didn't happen. And we ended up closing this credit spread down on 723, and we netted a nice little 16% profit on Delta. So I'm hopeful that most of you that are following the show enjoyed the fruits of that trade. It was a real good one. Okay, now let's take a look at our portfolio. And Ryan has a graphic he'll pop up here. This is how we've done this year in what I call snipers. Again, snipers is about grabbing short-term profits with a high probability of profit. That's why we name our show Short-Term High Probability Profits, because that's what we do. And this performance report, as you can see, we've had 88% winners, 32 trades, 28 winners, 4 losers. Yeah, we lost 12% on our trade. We lost 12% of our trades. And over a period of 5 days, on average, we're generating 10.43%. So this system is about, Moneyball is a good way to think of it. The movie Moneyball with Brad Pitt, the manager of the Oakland A's, and they didn't have any money to buy big players, good players, great players. So they just got players that had a history of just get on base, walk on base, get hit and get on base. It wasn't about getting hits. It was about get on base, get on base, get on base. If you do that enough, the runs start stacking up. So we get on base on average, and we make 10% on average every 5 days. So look, you could literally take your investment. You can get these trades for as little as $50. So our average commission or average profit, our average initial risk per trade is about 300. So you could literally take $300, make 10%. In 5 days, you're out on average. You do it again. So let's say we could do that 4 times in a month at least, if not 5. And you're doing that 10% 4 or 5 times a month. Do the math. Is 10% good every 5 days? Heck yeah. You can generate 40% in a month, or 20 even, or even 10 is great. The wins stack up. So that's what this system is. And we've been doing it in my own community and Michael Wade Trade Coach, mwtradecoach.com. We've been doing this live for 2 years, and our success rate, it's weird. It seems to end up around 10% every 7 days, and 90% of our trades are winners. That's been going live for 2 years in my community, and it's doing the same thing here this year with the Hub channel. So that's the system. There is a guidebook you can grab. I'm going to do a live trade here in just a sec. What time is it? We've got 3 minutes, so we're going to be in good shape. Grab the guidebook. It's free. It walks you through the 5 steps to identify opportunities, to determining where your line in the sand is, how to build a credit spread, how to manage the credit spreads, etc. So grab the guidebook. It's free. My idea is that you grab it, read it. It's very graphical and I think easy to understand. And then you can join me every Thursday at 9:15 with Ryan, and we can snipe high probability short-term profits each week together for free. All right, let's go into our trade of the day. And our trade of the day is on American Airlines. Now, check out this news announcement here. If you see the word slash, you see the word slash in a news announcement for an airline, that's really good. They've slashed their future guidance. Slashed, not cut, slashed. And if you take a look at American Airlines, and this is bad news, and good news for us, bad news for the airline, but this is where the stock was yesterday, and the stock is due to open up sub 10. All right, so why would with the company forecasting that they're going to make less money next year in the next quarter, why would the stock recover in that environment? The stock is also now below $10. Institutions will sell stocks off if they stay below 10. So there's a lot of reasons to suspect the stock will continue dropping. That's okay. I want to place a line in the sand at 11. And what that means is I want to make money anywhere below 11. And ideally, I could do that and make 10% over the next 7 to 14 days. So that's the idea. We'll make money if American Airlines continues to drop over the next 2 weeks. We'll make money if American Airlines goes sideways over the next 2 weeks. And we'll even make money if American Airlines rises but doesn't breach 11. Make money down, make money sideways, make money up a little bit. So that's the probability, the statistical probability of stock movement: down money, sideways money, up a little bit money. There's only 3 ways the stock can go, and we make money all 3 ways. So that probability is there. Couple that with the anchor of slashing guidance for the next quarter around the stock's neck, and that probability is immense. It's about as high as you can get it. Bearish credit spreads, as I mentioned, especially in a declining market, are the best. All right, so here we go. We are off. The stock is dancing with 10. It's now at 9.99. It's at 10. It could bounce a little bit off 10. We'll have to wait and see. But it's very unlikely that this stock will rise all the way back up to 11. It could happen, by the way. We're predicting the future. We do not know what the stock is actually going to do. We can only use history and patterns, historical data and patterns to predict. So we are predicting that the stock will not rise above 11. Okay, so this is what I have in mind. Again, I'm going to sell a credit spread at 11. All right, what's a credit spread? Get the guide. It's in the guide. I'll build one here, but get the guide. It's free. So we want to make money below 11. And so this is the trade I'm going to place live here in just a minute. American Airlines, AAL is the symbol. We want to sell to open the AAL, August 2. That's my birthday, Ryan. I'll be 62 on August the 2nd.
29. Wow. Very nice.
Yeah. 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 I'm now in my 60s, man. It's crazy. This thing is really happening. So we want to sell the 11 call, and then buy to open, same stock, same expiry, buy the 12 call, and we want to get at least 10 cents. All right. 10 cents is 10% of the spread width. That's a dollar spread width. When we put these trades on, the minimum credit we will accept is 10% of the spread width. $1 spread width times 0.10 is 10 cents. 10 cents isn't a lot of money. We're going to do more than one. Don't worry. I'll talk about that in a minute. Okay, so let's go see if we can get this filled live in Thinkorswim. And I'm just checking the prices here. And what I see is on August the 2nd. So here's the order. We're going to do 5 of these. We may have to fish on this one a little bit. So we're going to sell 5 American Airlines August 2, 11 calls, and then buy 5 AAL August 2, 12 calls. I'll tell you why 5 in just a sec. Now, for August the 2nd, which is 8 days from today, there's only 3 cents. All right, again, I need at least 10 cents. So in order to try to get a bit more credit, what I'm going to do is change the expiration, move it out 7 more days, and let's see if we can get some credit there. And it's showing a debit. Not sure where that is not the actual price. The market just opened and the option pricing will normalize in just a minute. So let's do this. Let's put this in for 10 cents credit. And this is another trading adage that if you employ will have a great impact on your trading psychology. This is my trade. I'm going to take no less than 10 cents. Fill it or don't. Let the trade come to you. Don't go chasing. Don't go getting more aggressive. Just let the trade come to you. So I'm going to do this. Sell 5, August 9 instead of August 2, 11, 12 call spreads. So let's put it in. Let's put a hook in the water, confirm and send. I'll go back to monitor here, and we can keep an eye on the actual mark price. You can see here I'm asking for 10 cents. This is a working order. I'm asking for 10 cents, and right now there's no credit showing. So if I go back to the chart, let's just see what the stock is actually doing. I expect that it's dropping based on that pricing. All right, it is bouncing a little bit. So we could get a bit lucky if the stock starts bouncing and get our 10 cents. So let's let that sit. That's as close as I want to get. You could drop to 1050, but to me that's too close. So we're going to pass on that. We're going to leave this one sitting right there. Now, there's also other airlines to consider. And the other one, and don't do both of these trades, by the way, because these stocks are likely to move together. Okay, so this is Southwest Airlines. And they came out with earnings as well. Let me show you the earnings on Southwest Airlines. The symbol is LUV. And if we scroll down here, okay, so Southwest actually beat their Q2 earnings and revenues, but did say that they are going to get rid of open seating. They need to reshore up. Their revenues are dropping a little bit. And that stock, at least at the open, was down, but it's also rising. So I'm going to pass on this one, I think, because the news wasn't dire. They didn't slash anything. They didn't lower any guidance, and the stock is bouncing just a little bit. So we're going to let American Airlines sit there and do what it do. We're going to get filled or we're not. But guess what? There's plenty of other stocks to look at. So Ryan, let's check with our beloved community and see if anybody else has a sniper candidate for us to explore.
Let's see here. Taking a look. Time to move to the high desert.
Yeah, I got time.
Let's see here. The AAL. Oh, there's Ford. Look at Ford, please.
Oh, yeah.
2nd of August. Yeah.
Yeah, thank you. Somebody wants a particular trade on Ford.
Yeah. 2 August, 14 and a half to 15 for $10 or I'm sorry, 10 cent CR.
Okay. Yeah. That's a good one. Here's Ford. I used to have a Ford Pinto when I was in high school. And my friends said that Ford meant fix or repair daily. and Ford certainly could use some fixing. The stock has plummeted. And I was looking at this one earlier. Let's take a look at the Ford news. Well, let me just back up a sec. Already, without news, I do know the news, but you see the chart. The stock has tanked. It opened here yesterday and has tanked below this blue line here, which is the 200-day moving average. That's a super strong support level. And so the stocks come down. So I know there was some bad news. I know earnings came out. But let's see what their earnings announcement was. You can go to finance.yahoo.com. You can type in the symbol here, and let's check the news. Let's see. Ford earnings fall. What? Ford earnings fall 35%? What? That's huge. As auto giant expects billions of dollars in losses from EVs. I'm getting excited. That is prime. They expect to lose billions of dollars in losses from their electric vehicle sales. And Ford did this. You might feel like a bit like a vampire, but this is trading. This is a game, and we know how to play a specific game, so we're going to play it. Now the question becomes, where do we draw our line in the sand? Yeah, I'd love to make money below 1450. Yeah, who wouldn't? But you're not going to get any credit up there. So I'm going to have to lower it. And let's see. I'd like if we can get 13, that would be awesome. All right. So this 13. If you take a look at the chart here, there's resistance there. Resistance there became support there. Here it was resistance. Resistance is like a ceiling. And then we have support, which is like a floor. And then we have resistance. This stock respects 13. So if we were able to get enough credit here, we could make money anywhere below 13. And in order to lose money, the stock would have to crack back up above the 200-day average, above 12, above 1250, above the 50-day average. And then we would potentially take a loss on this trade. Is that going to happen when they're cutting their revenue guidance by billions? I doubt it. Now, there is support right down here as well to consider. So we could get a bounce off 13. Look at that right there. See that? 13. The stock hasn't touched 13. That's not 13. That's 11. Excuse me. 11 support. The low of the day is right at 11, just almost not quite at 11. So that level could hold from here, but I'm not sure that it will, given the huge slash in revenue guidance. All right, so let's see then if we can get anything for 13. All right, so I'm going to go into this simulated Thinkorswim environment. Oh, wait a minute, look. Let me come back and play with this one. The credit on AAL is now 11.5 cents. I'm asking 10. So here's a trick. If you're not getting filled I'm asking 10 and it's worth 11 cents. Cancel and replace the order and reset it. There's 8 different exchanges that options trade on, and get yourself in the habit of just sort of resetting the order. All right, so we're getting close. That should fill today. Well, maybe even during the show. All right, now let's go back to what I was just talking about, and let me refresh everybody's memory because I jumped around there. Sorry about that. All right, so again, I want to make money below 13. Okay. So I'm going to go into Thinkorswim simulated environment. I'm not taking these trades. I don't take the trades I put out there for all of you. And then I go down the option chain here for August the 2nd. And there's my 13.50 credit spread. Not enough credit. Actually, I'm going to make this 14. I like the spreads to be no more narrow than $1 wide. And there's only 3 cents there at 13. 13.14 only offers 3 cents. It's a $1 wide spread. 10% of $1 is 10 cents. That would be my minimum, and I'm at 3 cents. So that's not going to work. Let's go to, that's August 9th. August 9th is 15 days away. That's about as far as I go on these. Only 2 days. Short term, by the way. 2 weeks, 1 week, sometimes a few days if there's enough credit. All right, so 13 won't work in this case unless we get a bounce. I don't think we're going to get a bounce on this one. So then I said, all right, well, let me step up a little closer to the heat. This is as close as I would get on this one, and that is 1250. Okay, so now instead of 13, we need the stock to stay below 1250. Likely to do that. But again, we're closer, so there's less probability. So let's see if we can get anything at 1250. And so I'm going to change the strikes here. 1250, 1350, keep them $1 wide minimum. And even there on August 9th, there's only 5 cents. So I'm not going to go any more than that. I'll ask for 10 cents. Minimum. And we're at 5 cents. Possible we get filled on this. Let's drop a hook in the water on this one. Let's do 5. And confirm and send. Send. And now I've got 2 hooks in the water. And for some reason, this one on American Airlines is not feeling. It looks like American might be bouncing a bit. Let's take a look. I know that because the credit was initially 5 cents. Now it's showing the current mark price at 17. So let's go back to the hub charts. By the way, if you like this software, go to hub.com. We just got it. All right, we just got American Airlines. I just heard it. Okay, so we got a fill on American Airlines, and I got filled at 15 cents. I got filled at 15 cents on this one. I did 5 contracts. Let me show you how the math works on this. So this is the actual fill price we got, 15 cents on American Airlines. I'll go back to this calculation sheet. This is right out of the guidebook. It's free. Please go down to the bottom here, or Orion will pop it in the chat box as well. Pull down the guidebook. It's free. It's good. It'll help you understand all this stuff. And this stuff here on this screen is contained in the guidebook. All right, so let's talk a little bit about calculating your max risk and your maximum return on investment potential. So our spread width on this trade was $1 wide. We got 15 cents of credit. So if you sell this $1 wide spread for 15 cents and you end up having to buy the whole spread back for $1, given the stock skyrockets back up, then your risk in the trade is going to be the width of the spread minus the credit. $1 minus 15 cents is 85 cents. If you divide 85 cents, if you divide the credit of 15 cents by the max risk of the trade, 85 cents, this trade has a potential profit of 18%. Okay? If you sell one contract, you'll have $85 of risk and $15 of potential profit. But if you did 5 contracts, you would have, what's that, $75 of profit while risking $425. All right, so this trade will give you $75 if you did 5 contracts, and your max risk would be $425. All right, now the cardinal rule of trading. First off, you're going to lose when you trade anything. You will eventually lose sometime. It's going to happen. And so you must assume that you're going to lose on every trade that you place. Do that. And then protect yourself by given that you could lose on this trade here, we could lose on it, you must limit the risk in your trade to no more than 2 to 3%, sometimes 5% if your account size is small. But for me, it's 2 to 3%. So make sure that this number, your total risk, is no more than 2 to 3%. And that way, if for some reason this becomes a max loss, you've only lost 2 to 3% of your portfolio. Okay, this is all about preserving your psychology. If you put half you're so sure about this trade and you put 50% of your portfolio in this trade, and then the stock gaps against you and you take a max loss, you've lost half of your portfolio. If you know that's a possibility in your head, your psychology will contract and you'll lose more and you'll have a really terrible time as a trader. So this is really, really, really important. Keep your position size contained to 2 to 3% of your portfolio's value. Okay, so we have a good trade there, Ryan. Let's see if we have any more to look at. We've got a couple of minutes here.
We do have one more. A bunch of people are filling on that trade. But David says ENPH.
Enphase. Yeah, we have the election coming up, and there's different policies around green energy. Enphase is a battery maker. Let's take a look. I did not see this one this morning. So let's see what Enphase is doing. Yeah, I don't see a lot of movement here. I see resistance at 120. Let's check the news. I don't do these unless there's some news that's backing the movement, which is why we typically do a lot of these around earnings. There's always trades. I'm not seeing any like total really good news or really bad news. I would be worried about Enphase dropping if the Republicans start to gain an edge, and it's expected that Republicans will grab the government in November. I know Trump is not as convicted about green energy. The Biden administration was all about subsidizing the green energy companies, the green companies, and that could go away. So this one is volatile. I don't see any news that really excites me. So I wouldn't do much with this one. Just to point out a couple of lines in the sand to keep an eye on. 120. And you all see this, 120. The guidebook talks about how to determine these lines, but you can see 120, 120, 120 support resistance, 120 resistance yesterday. And then you got support, a support line down here right at 95. So this stock looks like it wants to channel between those 2 points. I don't see any news. I could look harder, but I don't see any news. Hey, Ryan, I've got one. Ford's talking about losing billions on its electric vehicles.
Is it Tesla?
Yeah, man.
It is Tesla.
I was going to buy a Tesla before I moved to the jungle. I just wasn't sure they would have enough electric charging stations here, so I haven't bought one. But I drove one. It had the automatic driving, and I went through rush hour traffic on the highway with construction, and it handled all of it. But yeah, Tesla dropped hard yesterday on earnings. So let's take a look and see what the earnings announcement was. Let's see. All right, let's see. Okay, their revenues beat estimates, but their EPS lagged. And Musk came out and talked about pulling down, dropping their reliance on EV sales. EV sales are off. And so Tesla fell pretty hard, and so did Ford on a similar piece of news. So Tesla looks very interesting to me. I wouldn't go too much lower than 260. You could try 250. Indeed, today it's sort of bouncing a little bit. You can see that. That was our big down day yesterday post earnings. So Tesla may bounce. It's one of those boutique stocks that can move anywhere. So I'd be really careful on Tesla. 260 would be ideal. So you sell a credit spread at 260, 260 being the short call. And then 250 might be good, but definitely no lower than 240 on Tesla. So I'll let you all play with that one if you like it. And Ryan, I think that's all we have time for today. But buddy, it's always a pleasure to hang out with you on Thursdays.
Absolutely. Always a pleasure. Always a pleasure.
Me too. And those introductions make me cry a little bit. So I appreciate your your kind words in the beginning. It's always a pleasure.
Of course.
All right, everybody, have an awesome week. We will see you next week, next Thursday, 9:15 Eastern Time. Please grab the guidebook. It's free. And join me, and we'll snipe next week. We are in the heart of earnings season. There will be plenty of stocks to trade over the next handful of weeks. So have a great weekend, everybody. See you Thursday.